Alibaba shares closed under $100 per share today at $85.99. And it's been over a year since I last purchased any shares of Alibaba. However, today I did double down. And that's what I want to dive deep into in this video. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. Guys, it's been over a year since I last made any transactions with Alibaba, and I've purchased quite a bit of securities otherwise. So it's very interesting that this is the first time I'm now getting back into the security. However, the share price did decline significantly this week. It's now down to $85.99. And I didn't really want to take on more share ownership exposure. So what I did was I sold a cash secured put that I really don't think will get exercised. However, if it does get exercised, I'm more than willing to pay the price and keep that premium. And that's what I want to dive into. So right away, you can see that Alibaba has not been having a good year. They are down almost 30% on the year. And that continues a horrible trend back from 2021, where you can see that the shares are down over 60% from May of 2021, which was probably around the time when I first started covering Alibaba on this channel. So it's just been a brutal ride for anyone that has been in Alibaba. And that's fine. That happens in investing, especially in contrarian or value type investing. Now, with that being said, my whole thought pattern with investing in Alibaba is I've largely maxed out what I wanted my proportion of my portfolio to be in Alibaba. So I didn't really want to overtly take on more shares. However, if I sell cash secured puts at a certain price where it's very unlikely that they will get exercised, I'm putting myself in a position where I may be able to simultaneously generate income and not overtly buy shares in Alibaba. However, I do have to commit the capital. So that is effectively buying the shares, but let's dive into it. So from the comments that I get and from the questions that I do get on the Patreon, a lot of you guys are not familiar with cash secured puts. And so I'm going to be spending more time every month on our monthly calls talking about cash secured puts, how I price them and all of that stuff. So if you're interested, please consider joining us. But just on a high level, cash secured puts involve writing an at the money or out of the money put option and simultaneously setting aside enough cash to buy the stock. So really what you're saying is I'm willing to buy the shares at a certain price. Usually the price is lower than what the shares are currently trading at. And if they never get to that low value that you're looking to buy the shares at least you catch a premium that you can earn while waiting for the shares to come down to that price. So it can be seen as a win-win because no matter what the outcome is, you generate income. And the cash secured put that I decided to write was when the share price was just over $100 per share, I sold the $100 cash secured put for a $30 per share premium. Obviously, the shares are now under $100. And so what that means is that this option is now in the money, but it doesn't matter to me at the end of the day. So effectively what's happening here is the $100 less the $30 premium gives me a net purchase price of $70 a share. So at the current share price, my net exposure is under where the current shares are selling for today. And presumably by January 19th of 2024, I do believe that the shares will be above $100 per share. I'm pretty sure that that's going to happen. And I'll explain why I think it'll happen with the subsequent slides that I'm going to show you, because I'm going to dive right into all of the math that I do to sort of gauge the risk of this investment. But one important thing that I want you guys to understand is that $30 per share of premium, that's not a 30% return, because right now we're in April of 2022 and the cash secured puts expire in January of 2024. So you have more than 365 days there. So one thing that you can use, and the Patreons have access to this, is what I call the cash secured put analysis tool. So here you can put in the put exercise date, which is January 19th, 2024 for Alibaba. You can put in the put exercise price of $100 per share. You can put in the premium of $30 per share. That gives you your net purchase price of $70 per share. And you can compare that to the current price, which is right here. You can see it's $85.99. And then you can see that you have a simple put yield of 30%, which is just a 30 divided by 100. But you also have your annualized put yield. And that's what you need to be focusing on. And you can see here that the annualized put yield is 17%. So effectively what this is telling us is that if I do not get exercised on this cash secured put, I will generate an annualized 17.2% on my money. And if I do get exercised on it, well, I have a net purchase price of $70 per share. Now, I'm going to argue that I have a net purchase price of much lower than $70 per share. But before I do that, I just want to point out quickly that you guys can get access to all of the models, including that cash secured put pricing tool, at the $5 a month level on the Patreon. And once again, like I always say, you can try it out for a month. If you don't like it, send me a message right in the Patreon app and say, hey, Tay, I tried it. It wasn't for me, and I'll completely refund your $5. So there's absolutely no risk to you. And what I actually find ends up happening, people sign up for that $5 a month tier, and then a lot of them just upgrade to the $15 a month tier because they really want to be involved in the conversations we're having every month when we're discussing different types of opportunities that exist in the market. So I really encourage you to join us. I am absolutely grateful with how many people have decided to join the Patreon up until now. So moving on, the reason why I say that the net purchase price is actually lower than that $70 per share is because you guys have already seen me discuss on this channel that Alibaba has won a lot of cash on their balance sheet. 2, they have a lot of equity securities on their balance sheet as well. And 3, over the time of this option, the company is still operating, so it's going to generate some free cash flow that will inevitably end up on the balance sheet, which inevitably will end up getting paid back to us. So you got to consider all 3 of those items. And the one item that I'm not considering that you could consider if you wanted to are the investments that they have on their balance sheet, which they're accounting for under the equity method. I'm just not accounting for those. Okay, so how do I calculate how much cash flow per share they're going to generate over the 2 years that I'm going to be in this option? Well, from here, you can see that over the past 9 months, they have generated $17.8 billion of free cash flow. And so I just annualized that to around $24 billion of free cash flow. And moving on to the slide, you can see how I got to that 23.8. I effectively just said that they'll generate $6 billion. You can say that they'll generate less than $6 billion in the fourth quarter. You'd probably be right. But that being said, I allocated around $7 billion of CapEx. And this is maintenance CapEx. This is not really investment CapEx, which I think is a high estimate for maintenance CapEx. But I'm just being a little bit conservative in this estimate. But that being said, you can see that their free cash flow is around $17 billion a year. And so on a per share basis, that's $6.30 a share. And so you would have to multiply that by 2 because you'd have access to 2 years before the cash secured put gets expired. And so you can see me doing that here in the logic behind the cash secured put sale. So obviously the strike price is $100. The premium that I'm generating is $30. The calendar 2022 free cash flow per share generation is $6.28. And the calendar 2023 free cash flow per share generation is also $6.28. Now, you probably should discount that. I don't care. It doesn't really matter. The cash and short-term investments on the balance sheet is around $27, $28 per share. And the equity securities that they have approximate around $15 per share. So already here, the cash that's already on the balance sheet plus the cash that is expected to be on the balance sheet before the exercise date amounts to around $85 per share. So basically what this is showing us is that the share price that Alibaba needs to be at in order for me to break even on this investment at January 19th, 2024 is $14.64 if it generated the free cash flow that it presumably would generate in 2022 and 2023. So obviously the business that Alibaba runs is worth more than $14 or $15 per share. So you can really see here how there's such a huge margin of safety with this investment. And that's kind of how I'm thinking about it. But guys, in the comments, let me know sort of how you think about cash secured puts and whether or not I'm thinking about this correctly or not. I don't really care if I'm wrong so long as I'm learning and getting better, right? And so that's kind of the way I think about this. But also, guys, one thing that I want you to really pay attention to is Zoom's share price has really been coming down. And this is a stock that I actually think has a little bit of a moat. I think Zoom and Microsoft end up owning this space. And so one thing for you to really consider is the analysis that I do on Zoom, which you can get to right here.